I welcome you all to the earnings call of Meghmani Organics Limited for Q3FY23. Today, we have with us the management represented by Mr. Ankit Patel, Chief Executive Officer, Mr. Gurjan Singh Chahal, Chief Financial Officer, and Mr. Bharat Modi, Investor Relations Advisor. Before we get started, I would like to remind you that the remarks today might include forward-looking statements, and actual results may differ materially from those contemplated by forward-looking statements. Any statements we make on this call today is based on our assumptions as on date, and we have no obligation to update this statement as a result of new information or future events. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to invite Mr. Ankit Patel, CEO of Meghmani Organics, to make his opening remarks. Over to you, sir.
Thank you, Michelle. Good afternoon, everyone, and a warm welcome to each one of you, and thank you for joining us on our Q3 and 9 months FY23 earnings conference call. I trust everyone is doing well. I believe you have got a chance to go through the financial result and investor presentation uploaded on the stock exchange and website. During Q3 FY23, the Indian chemical industry was impacted by global macroeconomic factors, including geopolitical concern, inflationary pressure in major economies, rising raw material prices, and contraction in demand. Despite of these short-term hiccups, we at Meghmani Organics remain focused on enhancing our capabilities and capacity, eyeing on timely execution. Meghmani Organics has a strong balance sheet with an ability to generate free cash flow. The company can fuel its capex plan with robust working capital management backed by internal accruals. India is becoming a preferred manufacturing destination as MNCs opt for China Plus One strategy thanks to its cost advantage, focus on quality and sustainability, and favorable business environment. The global macro factors have its impact on our financial performance this quarter. During the 9 months FY23, the company's revenue surged by 18.5% to nearly 2,000 crore, and the net profit during this quarter stood at 205 crore. During this period stood at 205 crore. The company continues its focus on cost control measures, which has led to significant reduction in other expenses and maintained the EBITDA margin to 14.1% for 9 months. On the balance sheet front, the company's cash and cash equivalents stood at 77 crore as on 31st December. The debt equity ratio stood at 0.43 as on 31st December. Despite ongoing capex, we are happy to share that the company has consistently maintained its debt to equity ratio to less than 0.5 in the last 3 years. The return ratio like ROCE and ROE are at 15% and 18% respectively. Now let me take you through the segmental performance. Agrochemical contributes to 75% of overall company's revenue. The company is able to maintain the EBITDA margin of nearly 19% for this division, despite the adverse global macro challenges. Meghmani Organics is well positioned to benefit from the China Plus One strategy of global players coupled with the capex plan eyeing on our new molecules. Pigment business contributes nearly 25% of the revenue. Currently, the pigment business is witnessing slow export demand and contraction in the prices due to the challenges global macro environment. During the quarter, pigment performance has been adversely impacted due to liquidation of high-cost inventory and exceptional loss due to the fire in the finished good warehouse. The company has adequate insurance cover. We expect to recover in demand in pigment division in the next few quarters. Finance cost point of view, the company's revenue contributes 85% of from the export business. Company follow prudent risk management policy and keep 60 to 65% of its foreign currency exposure covered by the way of natural hedge in the form of imports, forward cover, and borrowing in foreign currency. During the quarter, there was a huge volatility in currency movement, which has led to mark-to-market gain on receivable and mark-to-market loss on foreign currency borrowings. As per the accounting standards, mark-to-market gain of rupees 73 crore on receivable has been shown as other income, whereas mark-to-market loss on foreign currency borrowings, rupees 38 crore has accounted as finance cost. Out of rupees 38 crore mark-to-market loss, 35 crore is unrealized mark-to-market loss. During the Q3 FY23, there is a net foreign currency loss of rupees 19 crore, while for 9 months period there is a net foreign currency gain of 35 crore. Borrowing cost net of foreign currency impact is rupees nearly 5.5 crore for the third quarter and rupees 11.7 crore for the 9 months. Moving on our capex highlights. As mentioned in our previous call, the capex plan are progressing as per plan. On the pigment side, the first phase of the titanium dioxide plant with the capacity of 16,500 tons was commissioned on 18th January 2023. Our team is working towards stabilizing the plant, and the phase 2 capex of doubling titanium dioxide capacity to 33,000 tons per annum along with the captive power plant is expected to complete by Q3 FY24. The commercial production of the agrochemicals multi-purpose new plant was commenced in Q3 FY23 and the plant is getting stabilized. It will add meaningful contribution in the next financial year. We have announced to foray into nano urea fertilizer through our wholly owned subsidiary Meghmani Crop Nutrition Limited. We will incur the capex of nearly 150 crore for setting up a plant in Gujarat with the annual capacity of 5 crore bottles per year. The plant will commence commercial production in the Q4 of next financial year. MNCL aims to achieve a top line of nearly 1,000 crore on annual basis, on the full year of annual basis. The management is confident to sustain the historic growth rate for the coming years and create a long-term value for its esteemed stakeholders. With this, we would be happy to address the questions of the investors and analyst fraternity. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Rahul Veera from Abacus. Please go ahead.
Ankit bhai, hope all well on your end.
Yes, Rahul bhai.
Just want to understand this new project that we have announced for the CDMO thing, a contract. Will it be produced from the MPP plant, and what is the terms, like if you can throw some highlight, like what are the molecules or what are the volumes that we are going to do per year basis, or prices are fixed or not? Just some highlight of the contract, sir.
Rahul bhai, we have been working on this. We have signed this contract with one of the global companies, and as per the terms and condition with that company, I'm sorry, we are not able to announce the name of the product and the quantum as well. But as per whatever we can announce, we have already announced that the approximate value is 800 crore and the contract for the 5 years, and it is for the 5 years and it can be extended further.
Right. So we'll be producing it from an MPP plant?
So it is kind of both, partly MPP, partly existing plant.
Okay. And sir, since we have commercialized the MPP plant and we given the name of the molecules, so everything will be for external sales or some of them will be for backward integration as well?
It is mainly from the external sales only. As of now, the plant is also backward integrated. Mm-hmm. But as per our policy, we don't sell any intermediate outside. We always convert intermediate into technical product, and we prefer selling the product either in the technical form or in the formulation form.
Sure. Fair point. And so one last question from my end. What would be the average 2,4-D prices for Q3, and as of now, what are the current prices?
Rahul bhai, not just for the 2,4-D, overall in the agrochemical division also there has been reduction in most of the products, and this is across globally. All the chemical industry has been facing. If we talk particularly in the case of 2,4-D, then the average price is around nearly 225 rupees.
Okay, that is for the average of Q3.
Yes.
Okay, and as of now on 23rd January, it's holding on. Is that correct?
As of now, it's holding on. What we believe that the global condition has occurred because one of the factors was that China was facing the COVID situation. They were under kind of a lockdown. Now the China has opened up. Their consumption will also start rapidly. At the same time, some of the global factors of Ukraine-Russia war has also impacted demand, partly in Europe and partly recession point of view in US. But things are going back to the normal as per the global condition. That is what we feel. So in next few quarters, we believe that whatever price has come down, it should not go further below. In fact, it should start improving.
Sure. And so this contract that we're talking about, worth 800 crores, is it like January to December and we'll be executing some of it in Q4, like this next 3 months, or is it fiscal year for India, like April to March? When do we plan to commence it?
So it will start as per our financial year, yes.
Okay. So approximately 150-200 crores can come from that contract itself?
Yes.
Okay. Fair point, sir. Thank you so much, sir. I'll come back in the queue, sir. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. We have the next question from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Good afternoon, sir. Good afternoon, Ankit bhai.
Good afternoon, Ayush.
So I have 2-3 questions. First, so if we see the agrochemical division performance, we have done consistently very well in this. And we continue to build upon this by signing contracts, long-term contracts with customer, by bringing new molecules. Yet when we see the other things that we are trying to do, I'm trying to understand that why we are trying to foray into like urea also when we have so much of expansions lined up. How is it logical given that agrochemical has been such a strength point for us, wherein we are doing a very high intellectual property work with a very good margin, profitability, everything, and we can grow further in that. Yet we are going into something like urea. So that is one. And also along with it, I have some more questions on titanium dioxide.
Okay, so first of all, Ayushji, let me discuss regarding the nano urea project. So to answer your question why we are entering into this segment, first of all, let me clarify, this is not the conventional urea. This is the nano urea. So to brief you a little bit, in India per acre urea dose is approximately 1 bag of 45 kg. Now this nano urea is a patented technology developed by IFCO. So only 500 ml of bottle, half a liter bottle, is equivalent to 45 kg of bag. So you can say it is just 1% volume will be equivalent to giving the same kind of, or rather better result in the 1 acre land. And the cost point of view to the farmer, it is cheaper to the farmer. Now this patented technology by IFFCO, it is so efficient that it gives better result. The volume is less. At the same time, there is no subsidy. In the conventional urea, government pays heavy subsidy. It is a high working capital, highly subsidized business. Whereas in nano urea, not a single rupee subsidy is there. So we are not talking about the conventional urea, or we are not rather entering into any subsidiary-based fertilizer. We are coming with first nano urea, and later on we'll be adding some other crop nutrition products also, which is helpful to the farmer. Volume is less and it is more efficient. At the same time, it is making a synergy with our agrochemical division. Customer base remains the same, dealer distributor remains the same, and there is always a demand for the better product. So it is a right moment for us. At the same time, we have signed the agreement with IFFCO, so we are going to manufacture under the license of IFFCO's patented technology. So it's a proven technology. Our Prime Minister Narendra Modi ji is also emphasizing heavily on this product. In fact, he is being promoting this product even at the G20 conference. And we as a country, government is paying 250,000 crore worth of subsidy to the fertilizer companies. Now, with this new product, government ultimately wants to reduce the subsidiary load, and it is a very efficient product. And we have got the chance to enter into this segment with the help of technology under the license agreement with IFFCO. So that is the reason we are entering into this segment. Hello?
Mr. Ayush,
Yeah,
can you hear me? Sir, kindly
Hello?
proceed. We couldn't hear you, sir. Kindly proceed.
I'm saying, am I audible?
Yes.
I'm asking how much of capex will we be putting up for this, and what will be the working capital requirement for, like you mentioned, 1,000 crore turnover?
So the capex would be nearly 150 crore for this project, and working capital requirement on the full year of operation basis would be about 3 million. About, you can say, nearly 200 crore.
Okay. And sir, coming to the titanium dioxide expansion that we are doing of late, we have seen that the prices of the end product have fallen, and that is where I think many people would be having this concern as to what you feel about this product currently, given the guidance we have given earlier that we aim to do very good margins in this segment, but now we are seeing that this product prices are falling. And there's always a question mark as to how will we be competitive versus our competitors who have backward integration, who have the access to ore and all those things. So can you please shed some more light on this?
So Ayushji, we understand that people and particularly investors are cautious about how Meghmani will do in titanium dioxide. First of all, as I mentioned in my speech, we have already commissioned the plant on 18th of January. And we hope to stabilize the plant because this is a new plant, so it will take nearly 1.5 to 2 months time to stabilize it. So we believe that in next 1.5 to 2 months time, the production volume as well as quality should get stabilized. So that is the first thing. Yes, prices have dropped for this product globally, no doubt about it. But as this is not for only this product, it applies to globally for majority of the chemicals because of the global conditions. We hope that once the market demand will improve, the prices will also improve. And apart from the global condition, we are targeting this product particularly from the domestic point of view, where the majority application is into the paint segment. And the paint segment is growing at nearly 15% YOY. And that is the reason big corporates like Grasim and JK and JSW, these groups are also entering into the same business. So there is going to be a very good demand. And as of now, the titanium dioxide is being imported heavily in India. So under Atmanirbhar Bharat, we'll be selling mainly into domestic market. And we are very confident that this project will change the face of the pigment division. And because of the high capex and there is a high entry barrier, so we don't see any small player entering into this business.
So you believe still, given the current prices, we can do 18-20% operating margins in due course once the plant stabilizes, because we don't have any backward integration into the ore and all those things. So that is where the question is, I think.
See, when it comes to the ore is a naturally occurring thing. There is no such company who can manufacture the ilmenite ore by themselves. The only thing is the mining rights. So the mining rights are also not with all the companies. Either ilmenite is being imported or it is available by the Indian rare earth who is giving the ilmenite. So it is available either domestically or from the imported. And we have both the sources, from the Indian Rare Earth Organization or from the importer. So it is available at both the locations. So as far as the raw material availability is concerned or the viability is concerned, we don't have any doubt. For the time being, yes, the prices are less, selling prices is less, but things should go back to the normal very soon.
Okay. And so, last question from my side. So, given that we are doing so much of expansion and we have been continuously announcing expansion in agrochem, pigment, and now urea also. Yet, if you see, there's a very complex borrowing and loans also that we have given, which investors have questioned earlier. And in this quarter, we have seen how it has impacted and created a lot of question mark on the forex policy. So, what are your thoughts on it, and if you are trying to do something about it? Because Meghmani in itself has a very high capex requirement, working capital requirement going forward, and we have given loans to Meghmani Fine-Chem at a low rate, while this euro borrowing and all this are very complex. It hits us at some point or the other. So, any thoughts or?
So I see regarding the financial point of view, Charles will answer you, but to give you the brief idea about our policy and everything, we have a very stable policy when it comes to the finance. We never speculate. So we are not in the business of speculation of foreign currency. So this is the first quarter when we have seen such a high volatility. And this was beyond anyone's control. So in the past also, over a period of last 2, 3, 4 years records, if you will see our finance cost was negligible, very low. So, sometimes because of the global condition and it happens in this fashion also, but this is not the regular thing. And we have very stable financial policy where we don't speculate. Now, from the detailed point of view, Charles will intervene.
Good afternoon, Ashishji. Actually, as far as foreign currency is concerned, so we have now more than 80% exports, and by way of natural hedge, so we have imports, then we have borrowing in foreign currency, as well as we take forward wherever required. But in the last quarter specifically, if you see, so short-term borrowings are in euro. So euro has moved from 79 to 88, more than 12% rise in one quarter, while dollar remained 3 to 4%. So, but overall there remains a currency gain, and we remain covered around 60 to 65% as per our policy. So we are always naturally hedged up to 65%, 60 to 65%. So that's why you see overall it is a currency gain. So on the receivable, 73 crore of gain is there, while MTM is 38 crore.
So this is for 9 months, the 73 crore gain that we are talking about?
Yes.
Okay, and for this quarter, can you clarify how much of other income details break up?
Yeah, this quarter other income is 19 crore, while MTM is 38 crore. So during the quarter, there is 18 crore of loss on the foreign currency. But majority is on MTM because we have a long-term borrowing. So it is, you can say, evaluated at the last day of the closing of the quarter.
But sir, don't you think that these things are something like euro crisis and all these currency are very like they can hit us much more in coming times, or something wrong can happen, and we should be careful to unwind them and reduce these exposures? Like we must be having an export in dollar, but this borrowing is in euro. Why?
We are very much cautious about it, but we have to take a trade-off. While you see in the dollar, so if dollar also moved from 75 to 82 during the year, from March to this, while euro has moved only 84 to 88 relatively. But if you see the borrowing cost in dollar now today, borrowing cost is almost 6%, while euro it is around 2.5%. So to that extent, even you consider our this MTM loss also, so overall borrowing cost becomes around 7.2, 7.25, taking impact of this MTM. While in normal course it is 2% to 2.5%.
Okay, so I'll maybe connect with you and understand more about it. Thank you.
Yeah.
Thank you. We have the next question from the line of Meghmani from Sunidhi Securities. Kindly note, ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Meghmani from Sunidhi Securities. Please go ahead.
Yeah, thanks sir, for the opportunity. So I have 2 questions. Mainly, one is around the nano urea. So, do we only have this exclusive patent arrangement with the IFFCO, or it is that later on it can go to the other parties as well?
Bhagwanji, as far as I know, IFFCO has given this technology to some other PSU like RCF and NFL, because definitely government would like to reduce the subsidiary load, so they will be giving it to other public sector units also. From the private sector, I don't know about other companies, but we are among the one of the first companies who has got this kind of agreement with the IFFCO.
And later on, how will be the pricing of the product? Will it be a free market, or it will be governed by the government? How do you think that down the line?
It is purely free market. There is no subsidiary linkage to this product. So government has no control on pricing. So anyone can sell at any price this product.
And if you can just say something about the current pricing of the urea and what price we would be thinking to price it, and accordingly the margins in this product.
So, if I tell you from the conventional urea point of view, the conventional urea bag costs around 265 rupees to the farmer. Where on the same bag, that is 45 kg bag, on the same bag, government gives the subsidy of close to 2,000 rupees. So farmer gets that product at hardly 10% cost. So there is a heavy subsidiary cost on government. At the same time, this nano urea bottle, which is only 500 ml bottle, that costs around 240 rupees to the farmer. So it is even cheaper, 10% cheaper than the conventional urea bag. At the same time, there is no subsidiary on this product. So government deals heavily on this product. So there is a huge pressure from the government side to convert conventional urea into nano urea so that they reduce the subsidiary load, which is 2,50,000 crore. So, and this is a very good product. As far as the effectiveness at the farm level is concerned, it gives better result than the conventional urea, because conventional urea is hand broadcasted and it goes into the soil and gets absorbed by the plant through the root, whereas nano urea is a foliar spray application where the product is sprayed on the plant, so the plant absorbs directly by the leaves, so it gives much better result.
And on the margin front, what kind of margin would be in this project?
So we have just signed the agreement with IFFCO. So I think more clarity will come once we get more technicality from them. So probably in the next quarter we will be able to disclose further information.
Thank you. And so the one last question, when you say that we have commenced this titanium dioxide and we are stabilizing, so what are the parameters which would be tracked upon for the stabilization of the plant?
So the parameter is for the stabilization of the plant. First of all, the capacity is nearly 50 tons per day is the capacity. So we should be able to run at the full capacity on the per day basis. So at least 50 tons output should come. That is one thing. At the same time, there are quality parameters. So there are various other technical parameters which I will not be able to disclose at this point. But those quality parameters also we need to achieve it. So if we do that, then we'll be able to stabilize it. So based on our pigment business experience, we feel that we should be able to stabilize the plant in next 2 months' time.
And finally, on the financial side, what is the current debt, the gross debt we are having on the books, and how much of it is into the subsidy, if you can get that bifurcation, and how much is in euro currency and how much is from India?
As on 31st December, we have around 260 crore of short-term debt, and while 430 crore is our long-term debt. In KCL, we have spent so far 275 crore, and we have taken debt of around 100 crore.
And this euro and India?
Our this MOL borrowing is in euro as well as in dollar. Our long-term borrowing is majority in dollars, and short-term remains in euro. So you can say it is around 60-40.
So almost 95% is in foreign currency.
MOL is foreign currency, 90% plus is. Gilburn is domestic INR.
100 crore.
Yes.
Because that business is a domestic-driven business where the revenue is going to come in INR. So over there we have taken the debt in INR. Whereas in the case of Meghmani Organics Limited, where the revenue, more than 80% revenue comes from the exports market, where we have taken the foreign currency loan.
Good. Thank you.
Thank you. Thank you. We have the next question from the line of Neeraj Mansinka from White Pine Investment. Please go ahead.
Yeah, just an extension of the last question. Can you share about the benefits of taxation that you have in KCL?
In case of KCL, it is in the 25%. We have opted for 25% tax rate. While in MOL also it is 25%. While in the new subsidiary, this Meghmani Crop Nutrition, so which we will get the benefit of the lower tax rate of 15%.
Okay, got it. Well, that's one. Second thing is, in the past, the titanium dioxide is known to be slightly technical intensive project. Can you give some more color on what are the challenges you have faced and how you overcome, and is there any challenge that you foresee in future in the technical side on the phase 1?
So we have just started the plant in the last week. So I think the challenges will come across these technical challenges in next 1 or 2 months' time. So let's hope that we stabilize as soon as possible, because it's difficult to predict what kind of challenges we'll be facing as of now. But yes, it is new product for us also. So there will be few challenges, no doubt.
The reason I was asking is because this was supposed to be a challenging project and technically. So I was just wanting to, if you can give some color how you overcome the issues that were there. It will be useful to understand what all went into when you were putting the phase 1 capex.
So it is not very easy to manufacture. That is why not every company is entering into this business. At the same time, it is high capex oriented. So we have taken all the precautions. We have hired the technical team which is capable, who knows the subject, titanium dioxide, the product very well. So we have a capable team. That is the first thing. And but Bharat Bhai would like to add further to it.
You see, in a product like this, we need to establish the process parameters.
Right.
The technology that we have, and there are certain guidelines on the process parameters. So it's always a challenge that whenever you take up a new product and you try to establish those things, there are going to be issues. But then, given the strength that we have, in terms of we have been into the business of a pigment, which is more or less, you could classify this as a pigment, and we have very experienced team. Not only, but that a lot of erstwhile employees of Kilburn also have joined us. So we are pretty confident about establishing these within the time frame that we have in mind. Sometimes, when you say the challenges, there should be a little kind of a time overrun in terms of establishing those things and getting the quality products. Now, this is the foremost challenge, and we are very much geared up on that part.
Right. So were you able to manage the quality product right now, or you are still awaiting that final quality product to be manufactured for titanium dioxide?
So we just started the plant in the last week, so it is in progress. So far we have not got the final product out. So we will come to know in the coming days.
Got it. Okay. Thank you very much.
Thank you.
Thank you. We have the next question from the line of Subrata Sarkar from Mount Infra Finance. Please go ahead.
Hello.
Yes, Subrata ji.
Yeah. Sir, so two questions. One specifically on the titanium dioxide side, sir, that giving the current existing price, what is prevailing in the market. So at that price, what kind of top line we can expect in our phase one? This is one. And second, sir, in terms of overall overall pigment segment. So what is our experience sales, like how many quarters or what are the time within that period we can return back to stable state of margin?
So Subrata ji, I think across global in the chemical sector, this kind of period is being faced in various other chemical industry, and I don't know, everyone is seeing this phase for the first time kind of a situation. Nobody has seen this kind of phase. Yes, definitely the prices are down in all the chemicals, and that too in titanium dioxide also. With this kind of price, what is prevailing today, on the first phase, it should generate nearly 300 crore top line, which is lower as per our expectation. At the same time, the raw materials have also reduced. So that is also a positive thing. But we believe that in the coming days, the titanium dioxide price should go up. One of the factors why it should go up, that there is a huge production in Europe. And as we all know, the cost of running any operation in Europe is going to be significantly high. Even today, the plants in Europe are not operating for titanium dioxide. So that will give ultimately benefit to the manufacturing companies in India or anywhere else in the world. And we believe the demand which has come under pressure currently, with the global market opening up, China opening up, demand should improve. So that will drive a positive growth for other players.
Okay.
Thank you. We have the next question from the line of Farquhar from Prosperity Wealth Management. Please go ahead.
Hello, sir. Could you please update about the old high-cost inventories, whether the same has been cleared, and what will be the EBITDA margin guidance for upcoming quarters and FY24?
I'm sorry, can you repeat your question?
Sir, could you please update about the old high-cost inventories, what we are having, whether the same has been cleared in this quarter, and what would be the EBITDA margin guidance for the upcoming quarters and FY24 as a whole?
As far as agro is concerned, so we have already consumed the high-cost inventory, which was in quarter 2, and slightly it will be used in this quarter, fourth quarter. So despite that, so we are confident of maintaining the EBITDA margin in line with the current 18 to 19% in agro division. In case of pigment division, so which we had inventory of high cost, and due to contraction in demand, there was some softening of the prices, finished products also. So which has led to, you can say, reduction into the EBITDA margin in pigment division. We expect in the coming quarters this demand should start picking up, and then there should be improvement in the EBITDA margins of pigment also.
Okay. What should be the blended margin, sir, for Emerald as a concern?
Overall, EBITDA margin is 14%, which we have achieved. So I think we will remain confident of achieving these numbers.
Okay. So currently, sir, we did 11.1%. So that is going to improve to 14%.
This is one of quarter actually where we have got a big hit in case of pigment division. So going forward, things should improve, and we should be able to achieve this 14% EBITDA margin.
Okay. Okay. So my second question regarding the tax. So current tax seems like around 6 crores something. So which is around 40% plus seems high. So what's the reason? Could you please update on that?
On the income tax front?
Yes, sir. Income tax front.
Yeah, income tax front remains in the range of 25 to 26%, subject to certain provisions which are allowances which are allowed and disallowed. Otherwise, in the range of 25 to 26%.
Okay, so overall, if you see yearly wise, it will be around this 25% range.
Yes, yes.
Okay. So next question regarding the fire. So what's the expected time by when we can expect the insurance claim to be received?
On the insurance claim?
Yes, sir.
Yeah, we are expecting in 1 quarter, I think we should be able to receive that. This is already under assessment. So in the coming 2-3 months, we are expecting that they should be settled.
Okay. So overall, sir, actually there is no much material impact for this fire as concerned?
Actually, in this fire case, majority was the inventory. So where you are getting based on the cost, and there was no much plant and machinery and building damage. So that is relatively very less. So that's why only impact of 4 crore was there.
Okay. Okay. So regarding the titanium dioxide, what's the overall capacity utilization and expected top line? Is that 300 crore as officer sales?
So as we just started, as I mentioned, the plant. So we feel that it will take few months, 2 months time nearly to stabilize it. So the next year, April onwards, we should be able to wrap up the production quite smoothly. And looking at the current pricing, we believe that the first phase should generate this much revenue. If the prices improve, the top line will also improve.
Okay, got it. Thank you, sir. That's from my side.
Thank you. Participants, you may please press star and 1 to ask a question at this time. We have the next question from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
Good afternoon, sir. I hope I'm audible.
Yes, Ayush.
Sir, 2 questions on the agrochemical segment. First, we have been hearing some news on some disturbances in the agro market in Brazil with respect to the government and the agrochemical lobby. So are we facing any issues there?
Ayush, as far as Meghmani is concerned, we do export to more than 70 countries. So it's very much fragmented. So we are not just dependent on one market. But yes, Brazil is an important market, overall important market from the agrochemical industry point of view. Currently, the new government which has come up, so it is a democratic country like India. So there has been some issues as well. The new president, Mr. Lula, is not very well taken by few people. So there are few issues already. But as far as the agrochemical or agriculture policy is concerned, Brazil is their economy is highly dependent on agriculture. They are one of the highest producing countries as far as the soybean, sugarcane and other crops are concerned. So they cannot disturb the ongoing agriculture related policies or agrochemical related policies. If that happens, then again there will be some unrest. So no matter what it is, they will be speaking anything. But the agrochemical market, whatever it is there, it will remain as it is. There is no issue.
Understood. So my second question is on the inventory levels with our distributors and globally. So has that come under check? What is the situation right now?
Inventory level for the agrochemicals globally?
Yes.
Yeah, so depending on different country to country, so agrochemical goes into agriculture. So if some countries are facing some weather-related challenges, some other challenges, then there may be here and there some plus or minus inventory level will be there. But if we look at the global average condition, then there is not much channel inventory as of now, because what has happened, their prices were going down constantly in last 1 year time. So nobody purchased heavily based on their demand. So everyone were cautiously buying the material. And at the same time, the consumption was going on continuously. So there is not heavy inventory down the line in the market, which is a positive thing. So whenever demand will be there, definitely, or the price will slowly, gradually going up, there will be a very good demand.
So we can expect to grow 15-20% in FY24 in agrochemical segment?
Yes, definitely.
The last question is on the titanium dioxide plant. So it was mentioned that we have also installed a captive power plant. Is that coal-based or is it renewable energy?
We have not installed. We are in the process of installing it along with the second phase of capacity expansion. And it is that captive power plant is based on the coal.
Why did we not go for renewable energy?
For the renewable energy, the capex is very, very high. At the same time, as per the government of Gujarat policy, we cannot buy more than 50% of the renewable energy for our captive consumption. So here, our business is to produce titanium dioxide, and for that, we can have at max 50% of, as per our demand, only 50% we can have the renewable energy. So for all our plants, like in agrochemical and pigment, we already have the 50% of our power is already renewable. We have a windmill for each of our plant already. So we cannot go against the government policy.
Understood. That's it from my side, and thank you for answering the questions.
Thank you.
Thank you. We have the next question from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Yeah, thank you for taking my question. Hello, Ankit Bhai and the Meghmani team. Nice talking with you. Am I audible?
Yes, Abhishek.
Yeah. So, Ankit Bhai, regarding finance cost again, I understood the accounting and finance cost, 350 crore loan and euro loan and 10% appreciation. So, but what about the 73 crore in the other income? I did not understand in the accounting of that, because I see other income is 26 crore or something like that. So if you could break it down, 23 crore, right? So if you can break it down, the other income and where 73 crore goes there.
Sure. So I think Charles will be able to answer.
Abhishek, we are talking about quarter and 9 months period. In the quarter, in the other income, 19 crore is foreign currency gain on the receivable, which we have in foreign currency. While in finance cost, there is a MTM of 38 crore, which is part of finance cost, which is on the borrowings, on the restating on the last day of the quarter. While for 9 month period, in the other income of 82 crore, there is a 73 crore of a foreign currency gain on the receivable.
Okay, because in the press release, I think finance cost note did not say 9 month MTM gain of 73 crore. So I think maybe my bad then.
Okay, the last line it is mentioned actually.
Abhishek, I also clarified these, when you had called me up around in the afternoon. So this is, Charles also has clarified further on this. But we rest assured about it that everything has been in line with what the accounting standards are. And our auditors also has approved these E&Y. So we are pretty much in the standards.
No, so I understand that. So I was just asking. So 73 crore is 9 months and 19 crore was this quarter.
That's right.
And this mark-to-market is, there's no cash impact, right? It's purely accounting.
It is a notional actually.
It's unrealized loss.
Right. No cash expenses. Okay. And thirdly, regarding insurance claim, I mean, we had loss of fire. We did not account it in exceptional items. I mean, can I ask why?
No, this is not an exceptional item actually. Though it is quantum is high this period, during this period, but it is not exceptional.
Okay. And we have covered around 39 crores for insurance and balance 4 crore it's been taken in other income only or
That is in other expense.
Other expenses.
Yeah.
Okay. Got it. Thank you. I'll get back to the queue. That's all I have.
Thank you. We have the next question from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Yeah. Am I audible?
Yes, Dipesh.
Yeah. My first question was, where do we see our next line of growth coming in from? Whether it's pigments, agrochemicals, or from titanium dioxide? Where do we see the next? I mean, for achieving our targets of sales, where do we see the growth actually coming from in the next, 1 year, let's say?
So, Dipesh, as you know, we have commissioned in this financial year 2 big projects. One is agrochemical multipurpose plant. So that will give growth in the next few years, next year as well as year after that in agrochemical division. At the same time, we have also commissioned in the last week titanium dioxide plant, the first phase of it. The second phase again will be commissioned in next few months by the end of December 2023. So this will drive the growth in titanium dioxide segment. At the same time, we are also coming up with the crop nutrition segment with the nano urea product. So that will give the growth in the year after that.
So that is FY25.
FY25. So the growth will continue. We keep on coming up with the new product capacity expansion. So the growth will continue in agrochemical division, in titanium dioxide, as well as in crop nutrition segment.
So we should expect just similar margins, or we should expect better margins, especially with nano urea and titanium dioxide?
Nano urea margins, I think, as I mentioned, will be able to give you the guideline maybe in 1 or 2 quarters later. For the titanium dioxide, definitely it is a better margin-oriented product compared to the conventional pigment.
Okay. And going ahead, where do you see the prices of pigments as well as the agrochemicals going? Do we see any more inventory losses in this quarter and in the year ahead, or will we see better prices realizations?
So globally, the market condition is very much difficult currently. We hope that the things should go back to the normal by the end of March, and things should start improving from April onwards. So still the 1 quarter will be little difficult from the pigment point of view particularly. But as far as the inventory loss is concerned, we don't see much loss coming because of the prices going low, high price inventory.
Okay. And one more question was regarding the fire loss of about 40 crores, which we showed. I mean, is this, why do we show it right now? Only when our claim is rejected, then we should be showing any loss? I mean, if we get the claim in, let's say, a quarter or next quarter, we'll again have to put it into your profits, right?
No. It is not loss which we have stated. We said due to fire there is a loss of around 43 crore, out of which 39 crore has been recognized as a claim receivable, and only 4 crore as per the policy provisions where some deductibles are there. So to that extent, 4 crore has been accounted for as a loss.
Okay, so only 4 crores has been accounted as loss. Rest
Yes.
Everything will depend upon the how
recognized as a claim receivable as per the policy.
As per the policy.
Yeah.
Okay. That's great. That's great. And basically, as what I understand is titanium dioxide will come in the next quarter. Then the next phase of titanium dioxide will come in December 2023, and the nano urea would come in somewhere around in FY25. This will actually drive our growth.
Correct. And just to summarize, actually we have completed two major capex in this year. Our multi-purpose plant and the first phase of titanium dioxide. So next year we will be expecting around 50 to 60% capacity, which will add, and in the subsequent year it will be at the normal 80-85%. At the same time, our phase 2 of titanium will also get commissioned in quarter 3 of next year, FY23-24. So that will add going forward.
Okay. So what is the, just want to know what is the capacity utilization in agrochemicals as well as in pigments right now?
So for the current plant, if we don't consider the new plant, then in the case of agrochemical division, the utilization is about more than 75%, nearly 80%. In the case of pigment, it is little low, about 55 to 60%. And because we have added the new capacity in the agrochemical division, so which will take some time to again reach at 80%.
Okay. So that is what I wanted to ask. That how much now this capacity, renewable capacity which we have added, how much will it increase our? How much capacity increase will be there in percentage terms?
How much capacity it will be added in percentage? I didn't get you.
Like agrochemicals, whatever the capacity right now we are having, and a new capacity addition, a total capacity will increase by how much?
See, Deepesh, because the product basket is completely different. The kind of the product we are coming up with are high value products. So just from the volume point of view, if we consider, then we cannot match it. Right. Okay. So the volume here is completely different. These are low volume, high value products.
So we should consider the margins. So how much margins uptake should we see in going ahead for agrochemicals because of the new addition of these high value products?
So agrochemical per se as an industry, as we know that it always ranges in the range of 16 to 18% as an industry. We always try to be above the industry average, and even with the new products also, we'll try to maintain above the industry average.
Okay. Now, since this quarter was, just wanted to know your views. This quarter is a one-off, or do we see more pain coming in the next few quarters? If you can just guide us.
Diteshji, if I tell you that last 5 years, from FY18 to FY22 as a company, we have been growing in terms of revenue by nearly 20%. So there is always a 20% CAGR growth. Same way from the EBITDA point of view also, we have been growing at more than 20%, nearly 22 to 23%. And in the profit after tax, we have been growing at 40%. So this has been a 5 years CAGR growth. So we have been consistently growing. So this is one of its quarter, you cannot have the growth continuously. There will be some ups and downs in the business. So we feel this is one of its quarter where otherwise overall as a business point of view, we are very bullish, and we hope that the coming years and few quarters will be much better.
Absolutely, sir. I've seen the growth because I've been with you as an investor for more than 5 years now, and I've seen the growth, phenomenal growth. Just wanted to understand that going ahead, do we see the similar kind of growth? That's it.